Limited liability companies offer significant advantages for small business owners, but navigating their regulations is crucial for maintaining compliance and enjoying their benefits. Understanding these requirements can mean the difference between business protection and personal liability. LLC regulations vary by state, but several universal requirements exist across all jurisdictions. Every LLC must have a registered agent to receive official communications, file articles of organization, and follow specific naming conventions that include terms like LLC or limited liability company. A significant recent development is the Corporate Transparency Act, which now requires most LLCs to report beneficial ownership information to the Financial Crimes Enforcement Network. LLCs formed before January 1st, 2024 must report by January 1st, 2025, while new LLCs have 90 days from formation to file. This requirement affects many small businesses and carries penalties of up to $500 per day for non-compliance. When forming an LLC, owners must complete several key steps. First, select a unique business name that's distinguishable from other registered businesses in your state. The name must include LLC, limited liability company, or similar designation. If operating under a different name, you'll need to file a doing business as form with both state and county authorities. Every LLC must file articles of incorporation explaining its ownership structure and operational plans. You'll also need to designate a registered agent with a physical street address to receive communications from the state. Be prepared for filing fees, which vary significantly between states, and research the specific licenses and permits required in your jurisdiction. LLCs must choose between two management structures. In member-managed LLCs, all owners participate in daily operations. This is the default arrangement unless specified otherwise. Alternatively, manager-managed LLCs designate specific individuals to handle operations while other members remain passive investors. Your choice affects legal responsibilities and should be clearly documented in your operating agreement. Regarding membership, LLCs can have unlimited members or operate with just one owner. Members can be individuals, other LLCs, corporations, or even foreign entities. Unlike corporations, LLCs don't require a board of directors or formal meeting minutes. However, if a member leaves, the LLC typically must dissolve and reform with the remaining members. For tax purposes, the IRS doesn't recognize LLCs as separate entities. Single-member LLCs are considered disregarded entities, while multi-member LLCs are treated as partnerships by default. Most LLCs enjoy pass-through taxation, meaning business income passes directly to members' personal tax returns. However, LLCs can elect to be taxed as corporations if advantageous. State tax requirements add another layer of complexity. Many states impose annual franchise taxes regardless of profitability. California charges $800 annually, while Delaware and Texas base franchise taxes on revenue. These obligations exist alongside federal requirements and are essential for maintaining good standing. The primary benefit of forming an LLC is liability protection. Members' personal assets are generally shielded from business debts and litigation. Unlike corporations, LLCs offer flexible profit distribution, allowing members to receive percentages different from their ownership stakes. However, LLC members cannot receive wages and must pay self-employment taxes on their earnings. Special considerations apply to certain LLC types. Foreign LLCs operating outside their formation state must register and obtain a certificate of authority in each additional state. Professional LLCs for doctors, lawyers, and accountants face additional licensing requirements and ownership restrictions. Ongoing compliance is crucial for maintaining liability protection. Most states require annual or biennial reports detailing business activities and ownership information. LLCs must renew licenses and permits, update operating agreements when changes occur, maintain accurate financial records, and ensure registered agent information remains current. Failing to meet these obligations can result in serious consequences, including administrative dissolution, loss of liability protection, or financial penalties. Despite these requirements, LLCs remain one of the simplest business structures for small business owners. offering valuable protection and flexibility when properly maintained. Understanding and following LLC regulations isn't just about avoiding penalties. It's about creating a foundation for sustainable business growth and protection. By staying informed about both federal and state-specific requirements, LLC owners can focus on building their business with confidence.